Hello friends, welcome to my channel. This is CA Rakhi Agarwal. Today's topic is related to impairment of asset. That is Indian Accounting Standard 36. Impairment means, what do you mean by impairment? How impairment is different from depreciation. This we will discuss in this topic. It is an asset based standard. Generally impairment is to be done only on asset, not on liabilities, because impairment is a kind of reduction in the value of the asset. If there is a indication that there is a reduction in the value of the assets, then only an impairment testing is to be done. If there is an indication that there is a impairment in liability, it means the business is growing. But if there is an indication that impairment is going on the value of the asset, then we have to test impairment testing, because to estimate the future economic benefit, how the company will generate a future economic benefit from that asset. So that's why impairment testing is important. What we will going to discuss in this standard, firstly we will discuss about the introduction, that is how it is different from depreciation, because both are do a reduction in the value of the asset. Depreciation also an impairment, but depreciation is on regular basis. It is systematic basis, the company is doing a reduction in the value of the asset in the form of depreciation. But impairment is once in a while, like if some situation arise which is unfavorable to the asset, then only an impairment testing is to be done, and then only the impairment for that asset is to be done. So firstly we will discuss about the difference between depreciation and impairment. Then we will discuss about the objective, scope and meaning of impairment loss. What was the purpose of these impairment loss? What was the scope and what is its mean? Then we will discuss about the identification of asset that may be impaired, how the company will identify the asset which may be impaired. What was the indicator to identify that there is an impairment? How the management will identify that there is an impairment? So the identification of asset that may be impaired means there is some instance that indicate that decrease in the value of the asset due to that instance. Suppose there is a car and the company has banned the use of that car. Suppose there is a diesel car, some of the industries has purchased a diesel, manufacturing a diesel car in Rajasthan, but the government has banned to use that diesel car in Rajasthan. So it's an indicator that the company will not able to use that car for no more in Rajasthan. So it's an indicator of impairment. So that purpose the impairment testing is to be done. Then measurements of recoverable amount. What was the measurement? How the company will measure the recoverable amount? How the company will, how these indices helps to recognize and measure means of impairment loss. Then cash generating unit means a group of assets, and it also discuss, this standard also discuss about cash generating unit, also discuss about goodwills, and also discuss about corporate asset. If there is an how the standard guides us to allocate and reversals of impairment loss, and then disclosure part. So these are the contents of these standards which we will discuss step by step. Firstly, we will discuss about the introduction, why a difference between depreciation and impairment. How we will determine the carrying value of the asset, we will study in Ind AS 40, we will study in Ind AS 16, we also study in Ind AS 38. about the carrying value. What do you mean by the carrying value? Carrying value, particular value of the minus depreciation, that is accumulated depreciation, minus impairment loss if any. Depreciation occur in case of tangible asset, means charging on regular basis, but amortization occurs in case of tangible assets, we will say it as a depreciation, but in case of intangible, we will say it as an amortization. Another name of depreciation is amortization, which we will say in case of intangible asset over the useful life of the asset. Impairment loss means it is not regular in nature, means it is on situation basis, it is on event specific, means impairment is over and above depreciation. It is not charged on a regular basis because impairment is on some events, it is not on regular basis, that it is not on systematic basis like depreciation. Impairment is to be charged on some instance. So it is not charged on regular basis. It depends on the event which occurs, which is unfavorable event. Obviously, because impairment is due to unfavorable event which is arises, and reversal of depreciation is not possible because the company won't reverse the depreciation, but reversal of impairment is possible. But in case of goodwill, it is not possible. In all the assets, reversal of impairment is possible because if the suppose there is a ban in car for 2 years, but after that the government has removed that ban, so the market value of that car it got increased from the carrying amount. So reversal is possible in case of impairment. But once you are charged the depreciation, you will not reverse that depreciation. In case of depreciation, reversal is not possible. But in case of impairment, reversal is possible. But if the asset is goodwill and it is impaired, then in case of goodwill, reversal is also not possible. In any other asset, reversal is possible. So depreciation is to be charged to P&L every year on a systematic basis, but impairment is not charged on a systematic basis. It depends on the situation which is not favorable. Means impairment is charged once in a while. Depreciation is on consumption based, means how much you consume that asset. It is the depreciation is to be charged on that basis, but impairment is on event basis. That some situation arise, the suddenly the asset value of the asset goes down, and then you need to impair that asset. So it's depend on the situation. Impairment is totally depend on the situation, but depreciation is depend on the consumption. Now the examples are tangible and intangible asset charge over the useful life of the asset, say 10 years on straight line basis. Like depreciation is to be charged over the useful life of asset, we can say 10 years, 15 years, depend on the useful life of that asset. And but impairment, suppose the government has banned a car, suddenly the market value of that car goes down and below the carrying amount, so it is an impairment. If the recoverable amount is less than carrying amount, then only an impairment is to be done, and it books in the PL as impairment loss. But if the recoverable amount is more than carrying amount, there is no such impairment. So no testing is required if the recoverable amount is more than carrying amount. But if the recoverable amount is less than carrying amount, then only impairment testing is to be done. Now we will discuss about the objectives. What is the objective of this standard? This standard is an asset-based standard. Ensure that the assets are carried at no more than their recoverable amount. These standards generally ensure the assets are carried at no more than recoverable. How they will determine the recoverable amount? Higher of the fair value, less cost to sell and value in use. Fair value less cost to sell means, fair value means the market value of that asset, And cost to sale means if the asset is to be sold, then what was the incrementing cost incurred for selling that asset is the cost to sale, is the meaning of the cost to sale. So fair value less to cost to sale exit point of time means at the point of sale. At the point of disposal, fair value or less cost to sell is to be look into. But value in use means if the asset is to be used for a period of 10 years, then how the company will generate cash flow from that asset? What was the present value of that asset today? If that asset is to be used for 10 years. So recoverable amount, how we will determine a higher of the fair value less cost to sell and value in use. We will discuss what do you mean by the fair value less cost to sell in detail and also value in use in detail with examples in later part, and how the company will allocate and reverse the impairment loss. The how the company will allocate the impairment loss on a group of asset, how they will allocate the impairment loss on a group of asset, and if there is a reversal, then how they will do the reversal also on a group of asset. So these are the objective of these standard, and also the disclosure, how the company will do the disclosure, they guide us, the standard guides. Now comes the scope, what is included and what in which asset the impairment testing is to be done and in which asset it is out of the scope. So India's 36 means impairment testing, impairment loss of the asset is to be applied to all the asset. To all the asset, this standard applies, except some negative lists are there, except the biological asset measured at fair value less cost to sale. There is separate standard for that to determine if there is any impairment for in the biological asset. There is a separate standard to deal with that kind of impairment. That is Ind-AS 41. Now deferred acquisition cost and intangible asset arising from the insurance contract. There is a separate standard if any impairment arise due to deferred acquisition cost and intangible assets from insurance contract. There is a separate standard 104. We deal with this kind of situation. And non-current asset held classified as held for sale. If there is any impairment, there is a separate standard. We deal with that kind of impairment in Ind AS 105. Financial asset Ind AS 109. Inventory lower of cost and NRV, whichever is lower. So if there is an impairment, there is a separate standard, that is Ind AS 2. Contract asset and asset arising from cost to obtain or fulfill a contract. If there is a contract asset, then there is a separate standard to fulfill a contract. There is a separate standard to deal with, that is Ind AS 115. And deferred asset, if there is a separate standard for that, that is Ind AS 12, to deal with that kind of impairment. Asset arising from employees benefit, there is a separate standard, that is Ind AS 19. So all these standards are out of the scope of these standards. There is a separate standard for that to deal with. Ind AS 36 has applies to all assets except this negative list. Now the impairment loss. What do you mean by impairment loss? Impairment loss is the amount by which the carrying amount of the asset or cash generating unit means a group of assets, exceeds its recoverable amount. It means the carrying amount of the asset is 100 crores and recoverable amount is 80 crores. So the 20 crores which is there, 100 crores minus 20 crores, 80 crores, that is 20 crores is an impairment loss because the carrying amount exceeds the recoverable amount. Then the impairment loss is to be booked in the P&L. If the carrying amount exceeds recoverable amount, there is an impairment loss. For example, if the carrying amount is 4 lakhs and recoverable amount is 3,90,000, मीन्स आपके बुक्स में 4 लाख खड़ा है और आप रिकवर कर रहे हो 3,90,000, तो ये जो 10,000 रुपए है आपका लॉस हो गया, वो भी इम्पेयरमेंट लॉस, और वो आपको पीएल में बुक करना. अब रिकवरेबल अमाउंट, व्हाट डू यू मीन बाय रिकवरेबल अमाउंट? Recoverable amount of asset means individual asset or a group of asset means a cash generating unit is higher of the fair value less cost to sell and its value in use. Means how we will determine the recoverable amount? Fair value less cost to sell and value in use. First we will determine the fair value less cost to sell, then we will find out value in use, and we will find out the higher of the two. That is the higher of the two, whichever is higher, that is the recoverable amount. This is to be explained by example. Suppose the carrying value of the plant and machinery in the books of XYZ Limited as on 31st March 2022 is 360 lakhs. The carrying value of plant and machinery as on 31st March 2022 is 360 lakhs. As at the date, value in use is also given, means 31st March 2022, the value in use is 250 lakhs and fair value less cost to sell is 300 lakhs. So what is the impairment loss? Firstly, we will determine higher of the fair value less cost to sell. Here fair value less cost to sell is 300 lakhs and value in use is 250 lakhs. So what was the recoverable amount? The higher of the two. So we will consider the fair value less cost to sell, that is 300 lakhs. That is the recoverable amount, and then we will find out carrying amount 360 lakhs. That is the carrying amount minus recoverable amount is 300 lakhs. As the recoverable amount is less than the carrying amount, so there is an impairment loss. So impairment loss is 60 lakhs. So 60 lakhs is to be charged to P&L as impairment. Now concept of recoverable. Now we will discuss about in detail what do you mean by the recoverable amount, what do you mean by fair value less cost to sell, what do you mean by value in use. In detail we will discuss, so it's more clear for us to find how we will determine the recoverable amount. Recoverable amount is the higher of fair value less cost to sell and value in use in both the cases in individual assets or a group of assets, that is cash generating. So how we will calculate the recoverable amount? Firstly, we will calculate the fair value less cost to sell and then we will calculate value in use, and then we will compare both, and whichever is higher, that is our recoverable amount. Firstly, we will get to know what do you mean by the fair value less cost to sell. It is a market driven value, because fair value is totally depend on the market, so it's a market driven value. Because fair value is a market depends on the market, it's a market driven value. And it is also at the point of sale, because here it says determine fair value less cost to sell. It's always at the point of disposal, at the point of sale we will determine the fair value at the point of sale, at the exit point of the value of the asset. Value can be derived more from the value in use means, and it's depend on the entity specific value, because how much the asset is to be used and what cash flow generate from the usage of that asset, it depends on that. Value in use is depend on the usage of that asset, and fair value less cost to sell depends on the disposal of the asset. But value in use depend on the at the time of the usage, what the cash flow we will generate from the use of that asset, and also at the time of turn. So value in use is depend on the usage of that asset. It's a entity specific value. It is not necessary to calculate both an asset fair value less cost to sell and its value in use. If either of these exceed with asset carrying amount, the asset is not impaired. Means it means ये जरूरी नहीं है कि हम लोग फेयर वैल्यू लेस कॉस्ट टू सेल एंड वैल्यू इन यूज दोनों को ही कैलकुलेट करेंगे। कब? जबकि कैरिंग अमाउंट हमारा रिकवरेबल अमाउंट से कम रहेगा, तब जरूरी नहीं है। बिकॉज कैरिंग अमाउंट जब हमारा रिकवरेबल अमाउंट से कम है तो हमको क्या दरकार है, बिकॉज इम्पेयरमेंट तो है ही नहीं, तो हमको क्या दरकार है इम्पेयरमेंट करने का। कैरिंग बिकॉज रिकवरेबल अमाउंट मेरा ज्यादा है तो मेरे को जरूर दरकार नहीं है कि हम कोई भी एक कैलकुलेट करने से मुझे पता चल जाएगा कि मेरा रिकवरेबल अमाउंट ज्यादा है कैरिंग अमाउंट से, तो मेरे को इम्पेयरमेंट करने का, बिकॉज देयर इज नो इम्पेयरमेंट, सो मैं क्यों दोनों को कैलकुलेट करूँ। वही बात बोल रहा है कि if it is not necessary to calculate both the asset fair value less cost to sell and its value in use. If either of these exceed with the asset carrying amount, the asset is not impaired. मतलब अगर कैरिंग रिकवरेबल अमाउंट एक्सीड करता है कैरिंग अमाउंट से तो एसेट इम्पेयर्ड ही नहीं है। तो कोई भी जब हम लोग, अगर हम फेयर वैल्यू लेस कॉस्ट टू सेल मैंने निकाला, मुझको तो उसी से पता चल गया कि मेरा रिकवरेबल अमाउंट ज्यादा है, तो मुझे मुझे पता है जब मेरा रिकवरेबल अमाउंट ज्यादा है तो इम्पेयरमेंट है नहीं, तो मैं वैल्यू इन यूज क्यों निकालूंगी। वही बोला, फॉर एग्जाम्पल कैरिंग वैल्यू इज 250 lakhs and fair value less cost to sell is 280 lakhs. From these question we will find out that 280 lakhs is more than 250 lakhs. तो अब मेरे पास वैल्यू इन यूज नहीं है तो क्या जरूरी है मुझे वैल्यू इन यूज कैलकुलेट करने का? कोई दरकार नहीं है। In the above case, value in use is not required to calculate as per formula. Recoverable amount will be higher of, because recoverable amount carrying amount से ज्यादा है तो कोई भी एक चीज ज्यादा है, कोई भी एक चीज कैलकुलेट कर दिया मुझे पता चल गया तो मुझे दूसरी चीज कैलकुलेट करने की दरकार नहीं है। इन द सेम वे, अगर मेरे पास वैल्यू इन यूज है विच इज मोर देन द कैरिंग अमाउंट, no need to calculate fair value less cost to sell. So in the above case, fair value less cost to sell is not required to calculate as per the formula. Recoverable amount will be higher of the carrying amount, so it is not required to calculate both. Now, fair value less cost to sell. Now we will understand what in detail what do you mean by fair value, what do you mean by cost to sell. Fair value, we will in detail study what do you mean by fair value in Ind AS 113. But as of now, we will just know the definition of fair value. Fair value is the price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants. The word market participant is more important because the fair value is the price which we will receive from to sell the asset in the market. If we will going to sell that asset in the market, what price we will generate, what was the price in the market if we will going to sell that asset at a measurement date in an orderly manner. So that is the fair value. It means fair value is derived by selling the asset. Fair value is derived when we will sell the asset. It depends on the fair value is always at the time of disposal. Fair value is also depends on the market participants. Orderly transaction at a measurement date. And cost of disposal means it is an incremental cost which is directly depend on the sale of the asset or cash generating unit, but disposal of the asset, cost of the disposal of the asset does not include finance cost and income tax expenses. These two items are excluded from the definition of cost of disposal because it is not related with the, which is these costs are not incremental or directly attributable to cost to disposal. It is these costs are not directly related with the cost of sale. The cost of disposal means which is directly related with the disposal of the asset, that cost are said to be a cost of disposal. For example, legal cost. If we will sell that asset, what legal papers, what legal cost incurred, stamp duty. If we will sell the property, what stamp duty is required, some transactions, similar transaction, like if we will remove that asset from one place to another, transportation cost, dismantling cost, any cost which is directly related to the sale of that asset, that cost is to be treated as a cost of disposal, but not any other cost. This is to be explained by example. Suppose XYZ own a bottling plant located in one of its factory. They are having a bottling plant in one of their factory. The professional valuer has estimated the current market value of that plant. They have estimated the market value of that plant is 10 lakhs, and for estimating there is a valuation fee of rupees 1 lakh. Now XYZ need to dismantle the plant and deliver it to the buyer. XYZ want to dismantle that plant and want to deliver it to another buyer. And so for dismantling, there is a dismantling cost, some specialized packing cost to pack that asset in order to deliver to the buyer, and some paperwork, some fees which is related to transaction cost. So legal fees would be itna lakhs, 0.5 lakhs. So how we will determine the fair value less cost to sell? We know that fair value of that asset is, as the professional has determined, the estimated current market value, that is the fair value will be the 10 lakhs. And the cost to sell, what valuation fees is related to the this incremental cost which is related to the sale of the asset. No, valuation fees is not related to, because firstly the company will do the valuation whether the asset is impaired or not. With the, for decision purpose they had to do the valuation. This is not related to the sale of the asset. This cost is not related to the sale of the asset. The cost is which is related to valuation is a decision. It's not a disposal cost. So valuation fees is out of the purview of the cost of disposal. So what are the cost of disposal? Dismantling cost are cost of disposal, specialized packing cost or cost of disposal, and packing cost, legal fees, all these are the cost of disposals. So fair value less cost of disposals are 6.50, that is 10 lakhs minus dismantling cost 2 lakhs minus packaging cost 1 lakhs minus legal fees 0.5 lakhs. So fair value less cost to sell is 6.50 lakhs. Now how we will determine value in use? Value in use is depend on the estimation basis. It is estimated to derive the future cash flow by using the asset over the useful life of the asset. Means the cash flow which the company will generate by using the asset over the useful life of the asset is the value in use. How the company will generate the cash flow by usage of that asset is value. The present value of future cash flow expected to be derived from the asset, from the individual asset, or from a cash generating unit, means group of assets. The company will derive its future cash flow which is expected to be derived from that asset over the useful life of the asset, from the individual asset or from a group of assets. Primarily two key indicators, two key things we will check while determining the value in use, that is estimating future cash flow. Firstly, we will estimate the future cash flow, what future cash flow is generated by using the asset, and also the at what rate it is to be discounted. So both are the two key things which is involved to find out the value in how the value in use is to be determined in case of foreign currency future cash flow. It is a three-step process. Firstly, if a company is generating any asset and which is in foreign currency, and future cash flow is generated from that asset by usage of that asset in foreign currency, then we will firstly generate the future cash flow in foreign currency and discount at that currency only in which it is generated. Means we will apply the discount rate of that currency, that foreign currency only in which the cash flow is generated, and then we will translate it at a spot exchange rate. This is a three-step process to determine the value in use in foreign. This is the case study of foreign currency future cash flow, that is on 31st March 2022. XYZ Limited makes following estimates of the cash flow from one of its assets which is located in USA, and cash flow is generated from USA only. The company is expecting to generate cash flow from that asset which is located in USA, and estimation is on, like they had estimated that in 2022-23 they will generate 80 dollars, and in 22 23 24 from that use of that asset they will generate cash flow of $100, and 24-25 they will generate a cash flow of $120 from the usage of that asset which is located in USA. And following information has also been provided, like applicable discount rate in India also and US also. Because the cash flow is generated in USD, the discount rate we will take to determine the present value of that cash flow is in USD only. Then after determining the present value of the cash flow of these 3 years at a discounted rate of that currency only, we will convert it at a spot exchange rate, that is rupees 45 per USD dollar as on the 31st March 2022. And these data which is 23 spot exchange rate and 24 spot exchange rate is not valid because they are of no use. Then we will calculate the value in use as on 31st March 2022. Firstly, we will find out the present value of the cash flow in foreign currency. So step 1 is to determine the cash flow, present value of cash flow in foreign currency. So in year 2023, 22-23 cash flow is in USD $80, 23-24 $100, and 24-25 $120. And present value is to be taken of USA present discounted rate, that is 10%. We will discount it by 1 divide by 1.1.10, that is 0.91. Then again 0.91 is divided by 1.10, that is 0.83, and also 0.83 is divided by 1.10, that is 0.75. This is to be multiplied with the cash flow, that is 80 into 9.1, which get into 72.73, and 100 into 8.83, so we will get the 82.64 present value, and 120 multiplied by 0.75, so we will get 90.16. In total, the total value in use, the present value of the cash flow in USD is 245.53. That is the present value, and then we will calculate that value in use in INR. So we will convert it in a spot exchange rate as on 31st March 2022, which is rupees 45 per dollar. So $245.53 into rupees 45 per dollar. So it will get the present value of cash flows in Indian currency, that is value in use, is rupees 11,048.84. Then we will take another example of impairment loss. Suppose Mars Limited gives the following estimates of cash flows relating to the property, plant and equipment as on 31st March 2022. Mass Limited is a company. They are estimating their cash flows from that property, from one of the property, plant and equipment as on 31st March. And the discount rate as on that date is 15%. And they will generate a cash flow. Estimating cash flow is from that plant machinery is in 2023, 22-23 they will generate 2000 lakhs cash flow. In 23-24 3000 lakhs cash flow. 24-25 3000 cash flows. 25-26 4000 cash flows. 26-27 2000 cash flows. And the residual value means at the time of terminology of that asset, means at the time of scrap sale, the value is will be 500 lakhs. Now the property, plant and equipment was purchased on 1st April 19 at rupees 20,000 lakhs. The useful life of the asset is 8 years. So the estimated value is at the end of 8 years will be 500 lakhs. And the fair value less cost to sell is rupees 10,000 lakhs. Firstly, we will find out the carrying value of that asset. The cost of PP as on 1st April 2019 is to 20,000 lakhs. Residual value is 500 lakhs. Now depreciation per annum is 20,000 minus 500 divided by 8, which give rise to 2,437.5 lakhs. Accumulated depreciation till 31st March 2022 will be for 3 years it almost over. So 2437.5 into 3 years, that is give rise to 7,312.5 lakhs. Now the carrying value as on 31st March 2022 after depreciation will be 20,000 lakhs minus 7,312.5 lakhs, which give rise to the carrying value as on 31st March 2022, that is 12,688 lakhs. Fair value less cost to sell will be given in the question, that is rupees 10,000 lakhs. So we will find out the carrying amount. We have a fair value less cost to sell. Now we will find out the value in use. Calculate the value in use. Value in use, that is 22, 23, 23, 24, 24, 25, 25, 26, 26, 27, and the residual value as on the end of the year, that is 26, 27, that is 500. At the end of the useful life, now the cash flows in 2000, 3000, 3000, 4000, 2500 in lakhs. Now we will discount it at a present value rate at the rate 15%. So 1 divided by 1.5, which give rise to 0.87. In the same way, we will find out the present value rates. Then we will multiply that present value rates with the cash flow to get the present value cash flow. That is 2000 into 0.87, which give rise to 1739.13. 3000 into 0.76, which give rise to 2268.43. 3000 into 0.66, which give rise to 1972.55. 4000 into 0.57, which give rise to 2287.01. 2000 into 0.50, which give rise to 994.34. And 500 into 0.50, which give rise to 250. In total, the present value cash flows will be 9,511.48 lakhs. That is the value in use. Then higher of value in use and fair value less cost to sell is the recoverable value. Recoverable amount, then we will calculate the recoverable amount, that is higher of value in use and fair value less cost to sell. Value in use, as we find out, 9,511.48 lakhs. Fair value less cost to sell given in the question, that is rupees 10,000 lakhs, and the higher of the two is 10,000 lakhs is the recoverable amount. Now step 5 is to calculate the impairment loss. We had also find out the carrying amount of as on 31st March 2022, that is 12,688 lakhs, and recoverable amount is 10,000 lakhs, which is less than the carrying amount. So there is an impairment. Now the impairment loss is carrying value minus recoverable amount, that is 2,688 lakhs. So we will do the accounting entry, that is impairment loss account debit to asset account, that is PPE, amounting to rupees 2,688 lakhs, and revised carrying amount. Now, if there is an impairment, the value of the asset is revised in the balance sheet. So, revised carrying value of that property, plant, and equipment will be 10,000 lakhs, and then we will also charge the revised depreciation in a prospective period, like uh, for the remaining useful life, because the useful life is 8 years, 3 years is already over. Then after 3 years there is an impairment loss. Then there is a revised carrying value. Then there is a revised depreciation for the remaining useful life of the asset. So the remaining useful life is 5 years left. So we will calculate on that the revised depreciation, that is 10,000 minus 500 divided by 5, that is we will get the revised depreciation. Identification that assets to be impaired. So an entity shall assess at the end of the each reporting period whether there is an indication that an asset may be impaired or not, and if there is indication exist, then only they will estimate the recoverable amount. It means it's a responsibility not of an auditor, it's a responsibility of management to look into their asset, that whether there is any indication of impairment of their asset or not at end of the each reporting period. And if the management find that yeah, there is an indication of exist, then only they will do the impairment testing. Then only they will estimate the fair value less cost to sell or value in use. Then only they will determine the recoverable amount. And if they find that their asset does not require any impairment testing, there is no indication, then they will not do the impairment. Impairment testing is not an easy task. It's not depend on just a paperwork. There is valuation required. There is a time consuming process. It's a cost expensive process. Each and every asset is to be impaired if there is an indication, and the management need to do that testing. But in some cases, there is no requirement of indication. It's compulsory to do the impairment testing of that asset. There is no requirement that if there is an indication only, you will do the impairment test. You will do the impairment testing even there is no indicator. It's a mandatory process to do the impairment testing of that asset. What kind of assets are the exceptions? There are some exceptions in case of below mentioned asset. The impairment testing is required irrespective of the indication of impairment. In case of intangible asset having indefinite life. If the intangible asset whose life is indefinite, they need impairment testing every year. Intangible asset not yet available for use, that asset also, and goodwill acquired in business combination. Acquired in case of business combination, that goodwill only, which is acquired in business combination, that goodwill is to be tested every year, even there is no indication of impairment. And in case of intangible asset having indefinitely useful life, and in case of intangible asset which is not available for you, so the indication of impairment is not required for that kind of asset for impairment test. The impairment testing is mandatory on above three assets at least once in a year. Means they required impairment testing every year in these three assets. The frequency and timing should be consistent for impairment testing. This is to be explained by example. Suppose in financial year 21-22 and in financial year 22-23. Intangible asset having indefinite use is to be tested. The impairment testing is to be tested in quarter 3. And in next year also the same asset is to be tested in quarter 3. So the frequency and the timing of impairment testing should be consistent. The intangible asset not available for use is to be tested in quarter 1. In next year also, it is to be tested in quarter 1. The goodwill is to be tested first year in quarter 2. The next year it will be tested in quarter 2 only. So the consistency should be maintained for testing these three assets. Intangible assets having indefinite life is acquired in January 22. Whether impairment testing is required on these assets for the financial year 21-20. Suppose intangible asset. The company has acquired the intangible asset in January 2022 and reporting period is March 2022. 3 months. In these 3 months, whether impairment testing of intangible asset having indefinite use for that reporting day, for that reporting year, is to be required. Answer is yes. Even the period is less than 3 months or 3 months only or less than a year, the asset is to be purchased even though in January on and the reporting period is March. The period is less than 3 months of the purchase of that asset. Even then only, then in that case also, the impairment testing is to be done for that kind of assets. So yes, in this case also the impairment testing is to be done even it is purchased on January 2022 and the reporting date is 31st March 2020. Why the company will do the impairment testing? There is a two type of indicators of impairment. Two type we determine these indicators are there, so we will do the impairment testing. So there are some internal indicators and there are some external indicators. What are the internal indicators? Like if there is a physical damage or the asset is obsolete, like due to any accident or due to any fire breakout, there is a damage of the asset and the damage is very severe damage. So there is a chance, there is a internal indicator that the asset will require an impairment testing. If there is a discontinuance or disposal due to restructuring plan, if there is some restructuring plan in some industries, so it will discontinue that industry. So if there is a plan of restructuring, so there is an indicator, internal indicator, there is a chance of impairment, so they will do the testing due to internal indicator. These are the indicators of impairment. Declining asset performance. Suppose at the time of purchase the asset are performing very well, but after some times, after 2 3 5 years, the performance of asset is going to be declined. The production is reducing due to the performance of the asset, so it indicates that the asset is going to be impaired. These are the internal indicators. If the asset is remain idle for a long period. Suppose the company has purchased an asset during the period of COVID, and for 2 years the asset is not used. So it become if there is no use of the asset and asset remain idle for 2 years, so it's the performance of that asset is declining day by day. They need a support impairment testing. If the going concern effects, that is also due to COVID scenario, there is some indicators that the company will not perform well, so it determines the value of the asset is declining. External indicators are significant decline in the market value, like we had taken the government ban example, the car, if the government banned the car, then the market value would decrease of that asset. So it's an external indicator. The value of the asset was also going to decrease, and there is a chance of doing the impairment testing. If there is a change in technology, market, economic or legal agreement. So with the change of technology, the demand of previous asset got decline and the demand of new asset is rising. So due to that also, due to change of technology, the demand of Maruti car gone down and the demand of Honda City is increasing. So this is due to the demand of new technology. Due to increase in interest rate, the cash flow is going to decrease. The value of the asset is going to decrease. The cash flow generate from the value of that asset is going to decrease due to the increase in the interest rate. Previously the interest rate will be 10%. After 2 years the interest rate will be 15%. Due to the increase in interest rate, the value of the cash flow from that asset going to decrease. It's an indicator that it's an external indicator that the indicators of impairments. Low market capitalization. If any company requires market capitalization and which is lower than its capitalization value, then also it indicate an impairment testing. So these are the examples of impairment testing. Now we will find out the elements which is reflected in estimating the value in use. What are the elements which we will take into consideration while estimating the value in use? Firstly, we will estimate the future cash flow of the entity expected to derive from the asset, from that underlying asset, how the company will derive or how the company will estimate the future cash flow from that underlying asset. What expectation about possible variation in the amount or timing of those future cash flows means what variation means what was the probability that the company will derive these amounts. Like in first year the company will derive first 3 years of the asset, the company will derive more cash flows. Then the other after 3 years the company will derive less cash flow, the performance of the asset goes down. So the company will determine accordingly, the company will estimate according to the variation in the amount of the cash flow and according to the variation in the timing of determine that cash flow. Means after 3 years if the goes down performance of that underlying asset goes down, so what how much cash flow the company will determine, and at what time the company will determine, at the time of sale what the company will find, how much the company will get the cash flow from that underlying asset at the time of scrap sale, at the time of the usage of that asset, both in amount and timing, the company will estimate. So, firstly, the company will estimate the future cash flow from that underlying asset. Then the variation, if there is a variation, the company will make a proper estimate of the variation in the amount and timing from those future cash flows. Of course, the time value of money is the value in use is totally depend on the time value of the money. How much the money is to be determined on the estimated basis means the amount which the company will get from that underlying asset after 5 years from the usage of that asset. What was the present value of that cash flow is not the same. Suppose they will after 5 years they will get 10 lakhs, and the present value of that 10 lakhs as is today is not the same. So it's totally depend on the time value of the money and also the other factors such as market participants and also the technology and other factors such as liquidity, other matter would reflect in the pricing the future cash flows the entity expect to derive from that asset. So these are elements of estimating the future cash flow or value in use. Basis for estimating the value in use. What basis is to be taken into consideration for determining the estimation of value in use? The basis, firstly, we will estimate reasonable and supportable evidences, assumptions is to be taken by the management to estimate the economic condition of that asset over the useful life of the asset. Means reasonable and supportable assumptions is to be required for estimating the economic condition over the useful life of the asset. Means the evidences should be reasonable and supportable. A greater weightage should be given to the external evidences rather than an internal evidences. The weightage should be given for to determine the value in use is the external evidences. The more weightage is to be given to the external evidences. Most recent financial budgets or forecast that has been approved by the management. The estimates to determine the value in use is we will take into consideration the recent forecast or budget which is approved by the management. The recent financial forecast or budget is to be taken into consideration while determining the value in use. Reasonable and supportable assumptions of the management is to be taken into consideration, and also weightage is to be given the external for to the external evidences. Projections should cover a maximum period of 5 years unless a longer period can be justified. Means value in use is to be is to be determined only for a maximum period of 5 years, not more than that, unless it is required or justified for a longer period. Unless it is required for justified purpose, then only a longer period is to be considered. Rather than that, a maximum period of 5 years is to be covered for projection of the value of the estimating the value in use. Basis for estimating the value in use. Now, what are the cash flows which are included and the cash flows which are not included in estimating the value in use? Cash flow should be estimated for underlying asset in the current condition. Means, suppose the asset is purchased 4 years back and we are estimating after 4 years, we are testing, we are doing the value in use, we are determining the value in use after 4 years of the purchase of the asset. So we will take the value of that asset in their current condition, not in the condition when the asset is to be purchased. So, what was the condition of the asset? After 4 years, we will take into consideration while determining the cash flows from that asset, while determining the value in use, or while determining the future cash flow from that asset. Cash flow from the continuing use of the asset. What cash flow we will generate from the continuing use of that asset? If we are using the that asset continuously, how much cash flow we will estimate, how we will take what how we will project accordingly, what cash flow we will generate from the continuous usage of that asset. And if in continuing usage we will require some repairing, so what cash flows, cash outflows that are necessary incurred to generate the cash inflow from the continuing usage of that asset. We'll expend some money to incur some inflow from the continuous uses of that asset. So in net of how much cash, net cash flow is to be generated and received or paid off at the terminal point of time. Means there is some in the current condition, we will include the current condition cash flow, we will include the cash flow which is generated from continuous use, we will reduce the cash outflow from cash inflow, set of that, and also the net cash flow if any to be received or paid for disposal of the asset at the end of its useful life. Means at that point of terminology of that asset, at the time of sale of that asset at the end of the useful life, how much cash flow is to be generated. Then what cash flows does not include it? Future restructuring. If the company say, yeah, we will do the future restructuring, so after 5 years, higher cash flow is to be taken into consideration while determining. No, it is not included. Future is if the company plans to restructure the entity which is not yet committed, we will not take into consideration for determining the value in use, for determining the cash flow. Improving or enhancing the asset performance. The company will say that if we will do some expenses, some repairing work to that asset, the asset will perform better. So it's not that after 3 years the company will perform. We will accordingly cash inflow or outflow from financing activities. That also we have said earlier that finance cost or income tax expenses is not taken into consideration while determining the cash flow. So cash flow or outflow from financing activities and income tax is not taken into consideration. And now discount rate. The discount rate should be pre-tax market rate that reflects current market assessment of the time value of the money and risk specific to the assets. Means we will take into consideration the market rate which is pre-tax market rate. Discount rate will be pre-tax, not the post-tax market rate. Will depend on the assessment of the time value of the money and also risk specific to the assets. And when an asset specific rate is not directly available, if the rate is not available, if the market discount rate is not available for determining the value in use, for determining use to surrogate to estimate the discount rate, then the entity will take the weighted average cost of capital. If it is also not there, then the company will take the incremental borrowing rate or the other market borrowing rate. So firstly the company will take the pre-tax market rate which reflects the current market assessment, depends on the time value of the money and is specific to the assets. If they are not there, then the company will take the weighted average cost of capital. If cost of capital is not there, then the entity will take the other borrowing market rates or incremental. Remaining part we will discuss in my next session. Thank you for watching my video. Please like, share and subscribe my channel.